Hey everybody, it's John King, and it is Friday the 30th of June, the end of the first half of 2023, and what a different place we are right now than where I thought we were going to be leading into this year. Why do I say that? Well, simply because we thought the economy would be struggling a lot more. We thought that things would be a lot harder on the economy with interest rates going up so quickly that typically tips you into a recession a lot faster. The economy's been way more resilient than we expected, and interest rates have stayed higher longer than we've expected. And it's really kind of changed my outlook. At this point, I'm looking at interest rates staying within this 5.75 to 7.25% range, maybe for the next 9 to 12 months. And that's not what we want to hear, but it's kind of just this, the economy is stronger than we expect it to be. Now, than we expected it to be. Now, the Federal Reserve is doing their part to try and crush the economy still, because they still think inflation is a big problem. And maybe they're right. Remember back to the 1970s when we had stagflation, and what happened was we had the Federal Reserve raise rates some, and then they stopped because they thought they were at enough and they didn't want to go too far. Well, the problem is it wasn't enough medicine. It's like taking your antibiotics because you have an infection and stopping early because, well, you feel better. The problem is the infection isn't gone. The Federal Reserve is convinced the infection is not gone. I don't know, but if they're right, two things are going to happen. We're going to continue to see upward pressure on interest rates through the end of this year, and we're going to see typically a recession coming faster than if they just stop now. So if they stopped right now and didn't raise interest rates anymore, they might accomplish the soft landing they were hoping to, but they run the risk of the infection coming back. And they're not willing to take that risk because they're not willing to deal with the persistent inflation we had in the 1970s. And I kind of agree with them. I think that we need to take our medicine. We need to do what we need to do in order to make sure that long-term we survive. Now, that means we're likely to head into a recession even deeper and harder once this all crashes. And I don't like the word crash, so I probably shouldn't use that word. But the truth is, we're kind of on a sugar high. And we were on a sugar high with inflation, and inflation is still really, really high. And so we're trying to balance that out by raising interest rates. But once the inflation is gone and it comes back down, or at least comes back to a moderate level, these really, really high interest rates are going to throw the economy into a recession. The question is when. And remember, recessions don't lead to lower house prices. They lead to lower interest rates. Only one recession in history, house prices went down during that recession, and that was the Great Recession in 2008 that was caused by housing. All right, the next topic I want to talk about today, the Golden State Finance Authority. It is a program that offers down payment assistance programs, down payment assistance options, and they came out with an announcement yesterday about a couple of major changes that are going to help more people be able to qualify for homes. So the first one is they're allowing for a higher debt to income ratio, even with a lower credit score. Previously, you needed to have a 680 credit score in order to go above the 45% debt to income ratio limit. Now they're saying, hey, we're going to let you go above 45 all the way up to 50 on a conventional loan, all the way down to a 640 credit score. Now, before you say, oh my gosh, that's great, John, I'm 640, I should qualify. The kicker is Freddie Mac's system has to like you. So with a higher debt to income ratio and a lower credit score, we run the risk that the computer just says, I'm not comfortable with this transaction. So don't take this as a fact that you're going to qualify. But here's the next thing that's super exciting, which is on July 17th, they are announcing a brand new down payment assistance program called Golden Opportunities, or GO, Down Payment Assistance Program. Couple of minor things. The bottom line is they're going to go lower in credit score, in some cases down to a 620 credit score with zero down payment. All you're paying for is closing costs. And they're going to allow higher debt to income ratios. They're going to allow up to a 55% debt to income ratio on FHA and VA loans. So you've got a lot, and USDA as a matter of fact. So you got a lot more flexibility if you're at the lower end of the credit score range, and maybe your debt to income ratio is a little bit high, because I don't like, by the way, high debt to income ratios if that truly is how much of your income you're spending. But sometimes you might have a bonus or some overtime that I just can't count. And so the nice thing is that I can't count that bonus or overtime or that second job, but you really do have it And I can qualify you at a higher debt to income ratio, still with zero down payment assistance. That program launches on July 17th. I am super, super excited about that. I'll get you more details as they become available. The last thing I want to talk about today is accessory dwelling units. Now, an accessory dwelling unit is basically putting an extra home in your backyard so that you can either rent it out or have in-laws living there. Accessory dwelling units are important to solving our housing problem because there's not a lot of land to build more houses in most communities. And so the way we're going to get more rental units and more housing units is to put accessory dwelling units in the backyards of a lot of homes. And in California, the rules have become way easier to get accessory dwelling units. Well, the cool thing, meaning the rules are easier because the city or the county cannot stop you from getting an ADU. So you don't have to jump through a whole bunch of red tape of people saying, nope, I don't want those in my backyard. Well, they can't stop you from doing it. Now, HFA, the California Housing Finance Administration, has a large budget this year. The fiscal year starts tomorrow, July 1st, for the state of California. And they have a large budget of money set aside to help people build ADUs. The question is, what are they going to do with the money? I don't know if they're going to give down payment assistance or financial assistance, if they're going to give grants of a certain dollar amount. They haven't said what they're going to do. But if you're thinking about building an ADU in your backyard, stay tuned to my YouTube channel because I'm going to tell you once they release the information on how you can get your hands on some money that will help you to build an ADU in your garage. Gang, thank you so much for listening to me. Please do me a favor. If you like my information, first of all, I do mortgages for a living. I'm not popular enough on YouTube to get paid for being a YouTuber. So if you know somebody who needs good advice on buying a home, refinancing a home, and a lot of people are actually doing cash out refinances right now because they've built up so much other credit card debt or they need that money to buy another property. So talk to me. I would love to be your resource. And please like and share these videos and subscribe if you haven't already. Thanks and have a great weekend. Happy 4th of July. Talk to you soon. Bye-bye.